Okay, how are we going there, guys? I've got a feeling we haven't. YouTube may or may not have changed something, so hope you can hear me. Just let me know if you can hear me loud and clear, or don't tell me if you're sick of my voice either. All right. Philip, g'day mate, how are you? That's good, all ready to go. All right, for anyone that's new, welcome. Thanks for joining us. Thanks for checking out the live stream at TradeSetup. It's the 15th of Feb. So an interesting night last night. We'll chat about that, and we'll just talk about where we're at with a few of our alerts we've been looking at, a few things we're looking at. Anyone that is new, just join us on Twitter. The top left-hand corner you'll see on the screen. That's how I think you call it, Twitter handle, if I'm being cool. Top right is Facebook. And just subscribe to us at our YouTube channel, which is the bottom right. If you jump on YouTube, search us, you'll find TradeSetup. You can just subscribe. So anytime we do go live, if I'm having an issue with the alerts or something like that, then that will pop up straight away. Also, unless they're having an issue. So we'll see. Just join us there anyway. Just do what you're told. All right, as you can see, I've probably had a few coffees, so it's been a good day. So far, so good. We're obviously chatting about. We'll start off with the markets last night. Found it interesting to say the least. We were looking for potential kick up in volatility when they had their inflationary figures out in the US, but I think that was just. I was more inclined to think that bonds were going to hold, which they have. The US yields are pretty much holding at the moment, so that's a good sign because they've been sold off so hard, and everything that's probably being factored in, not from from perspective of 3 rate rises, but 4. I think they're starting to factor in 4 rate rises. So there's probably a bit of a jolt to the upside on bonds, which is yields dropping, being oversold, as we've been chatting about for a little while now. So I think that's probably what's held up this market and what gave it a bit of a boost into the close last night on the US. So we had a good rally on the US, and European markets kicked up, which was, like I said, not so much unexpected, but I just think with the turmoil that came out previously, there might have been the odd chance that the market was going to have a big sell-off and just capitulate again, but it didn't play out that way. So if anyone checks out a chart, we'll get up there now. Just which one do I want? It's that one, isn't it? There you go. So just get up the right chart. You can see the Dow's actually had a good sell-off at the open. We'll just get up a chart now. I just want to go through that because I think it's an interesting topic to start off with. See where they're at, see what's happening with the US and what sort of flow-on effect that's going to have with us. That's the daily chart. If we go to a 30-minute chart, so the number's around 12:30 their time, which was just this red candle. So obviously got that reaction, a good reaction lower, which that big spike lower from, it was trading somewhere around 24,765, got down to, so that's about a 450 point drop, bang, over those numbers. So that was a big hammering. So there's still some volatility there, but you can see the rest of the session, it just built back up again and it started edging its way higher. So that was interesting. I did wake up thinking what was going on, what was going to happen, and then noticed that we were actually up a couple of hundred points in the Dow. So it was a good little pop, and that's not a bad sign with everything we've been speaking about, with the bonds being heavily sold off, potentially down at some major key support zone, expecting potentially there's going to be a bit of a bounce there. I was expecting a bit of a spike lower, and they did kick lower over the number, but I think they've worked their way back up again. So it's not a bad sign for equity markets. We get some nice solid buying into the close, and I think the way I'm viewing it is that obviously not too bad for equities. I'll still be a bit tentative, always going to be a bit tentative, I guess, on you don't really technically get these really big sell-offs like we saw. That was that capitulation and another capitulation. The market just dropping off without some sort of slow grind higher, just to bring in the confidence again. Anyone that's been crucified through these moves, Potentially got sold off here. They bought back in, on that bounce, just looking to, buy on the dip or whatever you want to do. A bit of opportunistic buying. It has bounced back up, and they may have got caught a second time round. So that sort of washout is just dints your ego, I guess. So the retracement, what we're going to get here, it might be a bit slow. Might struggle up at these highs at 25.2. This is on the Dow, sorry. Struggle up here, roll over, have to build another higher low. And that's just going to work. The more high lows you get, when buyers are happy to step in at slightly higher prices, that's just to show a good show of confidence also. But I think it's got a bit of time before that plays out. We are overextended on the 30-minute chart, up where we are at the moment. If we go back to, just look at the 4-hour and the daily, we might be about the same. So we're getting overcooked up here as well. So that would just suggest to me, on the Dow at least, we get a bit of choppy action, hold some high lows, maybe some sell-off. So it could be a bit more volatility coming to markets. You don't know what's going to trigger it. Everyone was sort of ready and raring last night. That's probably why you got that reaction low over the number on the inflationary numbers. CPI, I think it was, and PPI. That's why you got that reaction lower. That bounce is not so bad. It's not bad to see. I think the one thing I was looking at, I just had my eye on what could have triggered it. You see in VIX, the volatility index. If anyone knows, this is the VIX. That was that initial pop up when we got the massive sell off, and we spoke about this just recently about the was it the algos? Anyone that's was positioned for low volatility for a long time, and some of the algos, some of the computer generated system, I read something about it, that volatility goes into their algorithms. So you get a spike up in volatility, they have to readjust, and they have to adjust their positions or adjust their algos, which that's what potentially caused that sell-off. I don't think it's the whole reason, but what it might have triggered it. Now you're seeing that volatility is quite low again, so maybe they're repositioning themselves back on the other side. So it's just that's sort of the only real explanation I've got at the moment. That, and obviously with bonds being low, like I said, still skeptical about diving in head first into this sort of thing, because it could easily sell off into the close, tonight, tomorrow night. It could do the just reverse, is a bit overbought, overcooked on the upside at the moment. So being wary still. In saying all that, we got into a nice one today at FMG. I think that looks really good. It's been a couple of alerts recently on FMG. You can see there's good support through here. Let's just put it on a bigger chart. Yeah, why not? I'll talk about it now. So that's your weekly chart. You can see how it's big leg up, got to that 7, rejected there. It's a big sell-off here. Thought with this lower high it was going to continue, but buyers were stepping in here at 450 at that support zone, lifted it back up. If it was going to be weak, you would have expected these 3 down weeks were going to be followed and a breakthrough 450. Instead, it started holding up. And if you go down to the daily chart, we've had that little pop-up. Should have been some weakness coming, but instead it's turned and reversed. So we're just really preempting a breakout of 540 and potentially a move up to 6 at the moment. So I do really like that one. I think it's a nice chart. It's well structured. We'll see how that one goes. That's good, but there's been a few others we'll look at. We'll go over those in a minute. I just want to touch on the overall indices, where the XJO is at the moment. Spoken about this again a few times. So it was more of this move down. So you've got this big, strong move down. That was through 2015. We built our way back up. So this is your longer term trend up. Got up to the highs, just below 6,000, backed off, built a higher low just in here. Spent a good part of last year, for about 3 or 4 months, building that higher low, just dragging in sellers, and then squeezed them back out with a push up through 6,000. So this move down from high to low, we just can't see it, can we? If we go from high to low, you measure that from high to low, takes us in around that 58.20 mark. That's what we've spoken about before, your volatility projection as well. Taking you from the high to low brings you into about a support zone there. What we've seen is that rejection above 58. So it's rejection around 58.20 to 25. Just rejecting that zone. So it'll be interesting to see what we do from here. Whether the market starts building up again, a bit of confidence comes back in, and whether we build a lower high. I'm sort of leading towards, if I can show you here. So the ASX, we've had that move up. We've had that big capitulation down to say that's around that 58.20 zone. We're just starting to move up now. I'm sort of expecting more obviously you get a bit of buying come in, and then maybe some tentativeness, get a bit of a squeeze again to the downside. But then I'd be interested to see if we can hold that high low, and that's going to be a good little sign off we can do that. Just sort of hold up a high low above 58.20, or say 58, 50, 58, 50, 58, or 59, somewhere around. If we can hold up that high low there, if that's going to play out that way, that would be nice price action, and then I'd be a lot more confident in getting in and thinking we're going to take out that previous high and target straight back up to, oh, where is it? That 61.50 mark. But I still think there's a lot of water to go under bridge at the moment. Before that happens, you can't shake the confidence of people that much and then just expect it to bounce straight away and everyone to load back up again. Maybe there's a few people that tried once, they got cleaned up on the first move down, may have tried to, revenge trading, whatever you want to call it, with that little bounce, and they got cleaned up again. Or people are feeling the heat at the moment, who may have not have exited, they're not really ready to buy. So I think there's a few factors from a psychological point of view where a straight up bounce, straight up, and you expect it to just go straight up through 61.50, it's a tough call. I think it's going to be a bounce up. If it's lacking in volume, it'll be an interesting one to see. And then from there, if it does lack in volume, we do get this lower high play out and a push down. It'd be interesting to see how it goes. If that makes sense. If we can build up, or we have, that's your one move down, we have that second move down, we get down a lot lower levels. It could bounce up here, have that secondary move down all the way back down to 57, 56.50. Nothing's off the cards at the moment. Even after what happened last night, with the Dow actually, I guess, playing against somebody. So another reason why that could have happened, obviously everyone was, and this is something just a side note of what we were talking about in the Dow before, and I'll get sidetracked a bit, but it's interesting once the news, everything's pumped out about CPI. I was talking about as well. It was just something to be concerned about overnight. Everyone knows about it. That's what's coming out. Okay, if they get high inflationary figures, obviously everyone refers to what just happened in the past. When that come out, the market got slammed. So everyone knows about it. So everyone's probably going to position themselves that way. So when you saw that initial sell-off of 300 points, everyone's probably expecting, who loaded up then to hit it, expecting a big sell-off. And it didn't play out that way. It's just turn around and squeeze them all back out again. So the markets can do that time and time again. You got to remember, don't just try to factor in what's happened in the past to happen again. It's always it's good to watch and to take note, but just remember that the markets, like Davin says, moves in the path of least resistance. And if everyone's sold short and then it stops, path of least resistance is probably back up to squeeze them all back out. So they have to chase their tails on the way back up again. Whereas the previous sell-off, when we originally had that sell-off, the path of least resistance was probably down, because you get everyone's loading up, so everyone's either long or wanting to get long, and then bang, they all get stopped back out again. And triggers stops, triggers selling, everyone unloading on the market as they ease out of positions. So it's just one of those things to think about, and just think about what would happen. Think about it from, like I said, both sides of the market. Think where the majority of people are positioned. Now, if it does trigger if the majority of people are positioned short, what happens if there's a trigger from the upside? What's going to happen there? It could be a good rally and everyone's chasing their tail back up again, or reversed for the sell side. Does that make sense, guys? If not, I can't explain it again. I think I made a lot of it up. All right, let's just see where... So this is the ASX. We've got the daily chart. S&P. If that's our move down here, we are into oversold territory down here, so you probably do expect a bit of a bounce. But like I said, from here, it's just, we have to see what's happening, because on a daily, that's obviously no one can question it. It's a very good move down. Took out a lot of heat of the market. But remember, in the GFC, we got that big sell-off. Everyone jumped back in, thought that's it. It's all over. The sell-off's over. Bounced back up, retraced 50%. We had that secondary move down, which really cleaned people up. And that's when the market's really capitulated. So I think it's something, I'm not saying it will happen or won't happen. Just saying it's always something to have in the back of your mind if you're looking to load back up into equities, or you're looking to take some bigger positions or get back into the market full steam. If you look at it from a weekly perspective, it is a good little reversion to the mean, but just off a purely weekly chart, that's a good rejection just here. But I'd still want to see it do some work. I'm always looking for a bit more work to be done before I'm convinced. So we've got, does that make sense what I'm saying? So we've got this little, that was a good pop up, a pullback. We still could, we could pull back a bit more. Probably find, if we can find a base down here, we might have that second sort of push down, just wash out the lows. If you can see, that's our bounce. So that, just probably, let me draw that again. So looking from lows to high, that's our just capitulation. We've had a little bit of a bounce now. Whether we continue that up and then start to sell off, you want to see the same sort of thing. A bit of contraction in the market where it leads to higher highs, higher lows and lower highs, just so the market can squeeze in on itself. And then from there, you're just trying to take it. If it does break up to the upside, pushing out of contraction to the upside, then great. We could look to get back in and then just ride a nice trend up, nice healthy trend, rather than getting it where the market pulls down a big bounce and then it could just go for a second leg down. So this could easily just go down to the push out through the bottom as well. And then we might have a major complex correction once it breaks through the support line. Does that make sense? What I'm trying to say there, we either continue this trend up where it just pulls back, and that's, just think of that blue line up through here, that support line, as your reversion to the mean. We bounce off that. I'll just draw that up a bit better. So we bounce, that's your long trend line. We've just pushed up off there. We bounce there, hold up, and that's more of a continuation trade as we start to push higher into new highs again. Or that's your reversion to the mean. Or if we have a complex correction, just think of it from here. We have a bit of a bounce and then we press down. As soon as you break through that, it's more of a complex correction. And then you've got to look for the lows, and that could take a long time to work its way out. And then longer term, we start heading higher again. Well, that's just the slight difference. So you've got to keep an eye on whether we do build a lower high here, or we just work our way back up again. So like I said, I still think there's a long way to go before anything sort of plays out that way. But we'll see. Any questions on those? If you got, do you believe me? I'd love you if you love to believe me there. Love for you to believe me. Here we go. I'm starting to ramble a bit now. Dow's the same sort of situation, I guess, on the weekly. Good little daily, but you know, that's not convincing that we're just going to break up and just continue on to new highs. So if you're trading it that way, just be careful. If you're looking for a break up to new highs, just be careful. Generally, in most markets, you get that savage move down. When you get a bounce, it's more that opportunistic kind of buying than people looking to load up longer term, really thinking that's the bottom. I think you need to see some inside higher lows before a lot more people get convinced, because there's always those really aggressive traders looking for that short-term bounce. Once they out, then maybe you get that pullback, then you might get the different levels of buyers come back in again. Looks like we just dropped out. Why, here we go. Looks like we just dropped out there, guys. Sorry about that. All right. Looks like it's hanging in there. All right, let's continue on. It looks like we've just dropped out. We should be back again now. All back. All right, that should be all right now. A little glitch in the modem by the looks of it. Back, all right. Let's keep going. So, like I said, I just want to see if we can hold some higher lows in here for more confirmation. I mean, that one, I'm not convinced by just one move down if we're just going to turn around and head straight back up. I think it's going to be a bit more choppy. Like I said, it could take days, weeks, probably weeks more than anything to start holding. And then that convinced, and then you want that more sustained, this type of move. This move, when you start going vertical, is not sustainable. It's more this sort of a pop-up, grind lower, pop-up, new highs, grind lower, a more of an even type of a trend. And if we can get that and start working up with some minor higher highs, high lows, high highs, high lows, then great. But we'll see how that goes. 5 to 10 seconds. All right. Again, I think I'm going to have to get on the phone to Optus again. All right, now, so that's a Dow. That's a FTSE. It doesn't look very good. but I think it's just that big sell-off. See if they can hold up here and start doing the same type of thing. It doesn't look good from a technical perspective once you break through these lows. You can see these lows, say, through 72, the one at 73 and so on. When we break through those, to me, that bounce is going to be met with a lower high. Thanks, Nando. I don't think I trust myself either, mate. So that's the FTSE. DAX is actually looking a bit better. You got that key level around that 12,000, so I'd want to see it work its way up. And the DAX does go down and test levels quite a bit rather than hold a higher low. It can go all the way back down to test a key anchor level and then start to build from there. So that one's not so bad. That doesn't look too bad. We'll see how that goes. Well, the Nikkei, it's not looking too pretty. And the Hang Seng's bounced a bit, so that's not too bad. Look at the weekly, it's still the same. You know, go vertical, you'd expect at some stage the heat's got to come out of the market and pull back a reversion to the mean. Now, so that's covering the market. So we'll just have to, I guess, tread carefully when you're jumping into some shares, jump into good quality setups. Like we believe on FMG, it's a nice quality setup. We've got another one waiting, but I won't mention that purely because it's a subscribers only alert. So yeah, we've got a couple that we're liking, and it's got to be basically based around a good quality setup, something that's solid. May have just dropped out again, have we? All right, just let me know, guys. All right. Yeah, it's a frustrating process. All right, let's keep plugging away. Yeah, just looking for good quality setups if we're happy to put our money at risk, so we know exactly where our risk is, where our entries are, what we're aiming at, and just see if it can play out nicely. I mean, you can't also... The flip side, when you're going to be careful, don't be overly careful where you're going to stay out and see this thing just take off and grind high, and you're constantly looking for that. Because this sort of action when you do, if the market gets sold hard and then you just start doing this, that could just go on forever and take out those highs. And the whole time you're waiting for this deeper correction, a retest of the lows, but it could never happen. So that's why it's always good just to stick with your high quality setups. So you are getting into the market. And if it turns around and stops you out, that's just the nature of the beast. And if it does stop you out in a retest and then it goes again, so we do this type of action and then it holds up, then you get higher lows, so be it. That's a better setup. That's better confirmation this market's going to push higher up into new highs. But if it just does this sort of grind higher, don't be scared of jumping in, some good quality setups where you're happy to get in. You're putting your risk on the table. You know exactly where you want to get out if it does turn on you, so you're not taking too much risk, but you're actually in the market if it does grind higher. And you're not getting left on the sidelines, because it's just as risky not being in the market as it is being in the market, if that makes sense. As I guess a lot of you know. All right, let's I just want to chat about, what was the other thing? So with VIX, we talked about CPI. I got an email from Greg, and I spoke to him. He doesn't mind me chatting about it. I think it was interesting on Bitcoin. Now, he sent me a chart just mentioning that we had a bounce, and obviously people that follow cryptos, good bounce on cryptos overnight, good bounce on Bitcoin. And if you get on Twitter and follow a few, there's just all sorts of, I wouldn't say garbage that comes through. I'm just looking at it. I guess there's all sorts of professionals or experts in cryptos, experts in Bitcoin. But to me, it's not that. It's more of trading. You've got to take it still from a trading perspective. Not just say, I know about cryptos, so that's why I think it's going up. So you get all sorts of stuff on Twitter spruiking it. But even if they're showing a chart, I mean, you don't know what time frame charts they're showing. There's nothing. Let's actually just get Bitcoin up. You don't know what time frame they're looking at if they're talking about a bounce. So I think this is on the 4-hourly. Even if we go down to a 30-minute maybe, I just want to show you that. Get rid of that. Get rid of that. That from a technical perspective actually doesn't look too bad. But you've got to know if someone's spruiking this, you've got to know what time frame. And you've got to trade from your time frame too. You don't look at this time frame and go, oh, that's great, I'll buy into that, it's going higher, look how good I am, spruik it on Twitter, I'm an expert. I get really bitter about this sort of stuff, by the way, if you haven't noticed. And what they're trying to do is just, we call it talking their book. They're trying to talk themselves up a bit, talking the position up a bit. So, you know, followers who might, anyone sort of amateurish, I guess, is going to jump in and just follow it higher off the back of a tweet like that. But you've got to know their time frame. So that actually looked not too bad. You know, you could have bought it. If we can draw that up, I'm better off to go over here. Yeah, there is quite a few good little setups there. But like I said, you just got to know what, you know, you got one here, you can drive up here, but you got to know exactly what your time frames and where your levels are holding, where they're not holding. Then you get some more little setups. You know, you've got setups through here. What we look at, a move up here, and it breaks, it goes up here. You've got to know what, like I said, what time frame you're looking at. Does it look good? When is it extended? When is it not extended? So you've got to trade that. You can't just, I'm guessing, jump in. So it was interesting when Greg replied, I think, to I sent out an alert, but my time frame was, I think it was off a daily chart. I was looking at it. Correct me if I'm wrong, if anyone saw that. I'm pretty sure it was a daily chart. If you go to the daily chart, which we will do, I don't think I'm just trying to say, don't get caught up in this sort of chart. You know, if they show you that chart, you go, that looks great, I'm going to buy that. Bitcoin looks great. Everyone's positive about it. You don't know their time frame. They might be talking on a 5-minute chart, a half-an-hour chart, so you don't know what their targets are, any of that sort of stuff. If you go to a daily chart, it actually doesn't look... Oh, actually, I'm going to have to change it here. The daily chart to me is well and truly negative. And look at also, we've had a good little bounce here, but in context of the overall daily chart, it's not that, you know, it's in a clear downtrend. We might just be retracing back up, building a lower high, and then we might get some more capitulation back to down to 6,000. You don't know exactly what's going to happen there. Right, so in context of this, I think it's a bit hard to say I'm biased up or, you know, jump into Bitcoin, it's going to the moon. So I think it was interesting when Greg said, he said he would be happy to jump in, but then from what he's learnt, I guess, in the way he's changed his trading style, he's adapted, he's sort of been a bit more cautious on things and looking for better quality setups. And just taking, it's always good just, you know, if you're going to trade off a half-an-hour chart, it's probably good to look at the daily to see what context you're in. If you're trading, like we just showed here, if this type of price action was happening back when the market's rallying up, that's awesome. Then you can afford to let it ride. You know, if you bought into here and you had something, like I said, just a setup like this, for instance, you got a good setup like that, you go, that's heading higher, the half-an-hour chart's heading higher, and I'm in a zone like this, great. That's awesome. But the fact that the overall daily trend is heading lower, this could just be a bounce. We might head down, all the way back down to 4,000. We might retest 6,000, and then you get cleaned up again. You just got to know what context you're looking at. What's your, I guess we call it an anchor chart. If your anchor chart's a daily and you're using entries off even an hourly chart, great. But if you're just trading off one chart, you got to know exactly, you've got to be pretty, I guess, precise on your entries and exits. Does that make sense, guys, what I'm talking about? I think it was interesting just to hear a comment from Greg when he sent about referring back a chart or just having some sort of context to the overall move. I think we still got a lot of, you know, with Bitcoin, just as a side note, I think we've still got a lot of moves, a lot of work to do, a bit like the overall market. If this is, let's draw that up. If this is just more of that sort of reversion to the mean, the fact that we're getting that oversold, overextended, and we're nowhere near an anchor. So that's probably your latest anchor. We've had this move down. We bounced back up. We struggled straight back down again. So you got this move chopped up. Secondary move down. Actually, I'll draw that in a different color so it's a bit clearer. That's your move down. That's your secondary move down. Potentially this is a third move down. If that's the case, then I would expect a test, maybe not down to the lows, but to build a higher low. And then once we start breaking up out of that downtrend, and we get something like this when the MAs are starting to, they've come together and they're starting to head up again, that's where I think you can let things ride a bit more. Yeah, I've got to admit, with the stream, it's a bit frustrating to be exact. I think we were a lot more stable a while ago on this new modem. Now it seems to be really choppy, and it's very disappointing. Look, I hope you can all, just let me know, can you all hear me? It'll be good. If I've missed anything, or if you've missed hearing something, just let me know. All right. So that's ideally what I'd be looking for to play out on Bitcoin. And that's when I'll be a lot more aggressive. You know, if you hold this high low, I'll probably take that one step back. If we hold this high low in here, you know, do a bit of work. So you need to get these guys who have pushed it up to get them flush back out. And then we start to break up and out of that contraction off a higher low compared to that 6,000 zone, then I think it could be on. And I think that'd be really good if we get that sort of price action. Then, you know, we could be targeting up to here. Or not, I'm not saying up there, but then you've got a few levels to at least target. Just had to catch myself then. This level here, 13,000. So I think there'll be a lot of fat on the upside. But like I said, I think it's got a lot of work to do. And it's anyone that spruiks it on Twitter, it's always good just to switch off sometimes. You know, do your work, do your homework, do your study. Know what suits you when you're trading, what works for you in the way of trading styles, and then constantly trade that way. Because, like I said, you never know when people put up charts. Even if I put up a chart, no one really knows what my trading style is exactly. No one exactly knows what I'm looking for unless I put it explicitly. What set of setups we're looking for. So it's always good just to look at it, understand why, understand what we're looking at, and then adapt it to your own trading style. What suits you? What risk tolerances suit you as well? That's pretty much, I guess, the key or ideal for trading. Learn what suits you, and then, you know, forget about the noise that's on Twitter, forget about this, forget about that, and just adapt it. You know, if you see a good setup that suits you and it's worked in the past and it's a high probability setup for you, jump in. I mean, even now, like I said, if the market, you think it's going to be a bit more tentative on the market and you still see a good setup that suits you, suits your trading style, then, you know, don't be scared, jump in, because it could be the one that actually goes. You may get stopped out in it. You're never going to know. You will know after the fact, but if you don't jump in and it goes on like you thought, then you missed out on a good opportunity. And that's like when it comes down to what trading's all about, number crunching. All right. Let's get into it now, guys. What do you want to look at? Just put in some charts. If there's anything you want to look at in the way of stocks, could be anything. Chuck it into the chat and we'll go from there. So we got a couple that I'm eyeing off at the moment. We said we had FMG. That was an alert today. That's actually still looking good. That's your weekly there. There's this one that, go to a daily. This is one I actually don't mind at all. This is NOX. It's very small. It's only gone about 50 grand today. I think when it starts moving, it will build up the volume, but at the moment there's not a lot of volume just in there. But I like this sort of, it's had this big run up here. It's got to $1.80 from around the 30-cent level. Had a good little pullback, so that's flushed out a lot of traders, but they're just holding a higher low. If we just go and draw that up, actually, take out a lot of this noise. I'll get that back up. Will do, Sharon. Now it's had this big move up, so that's great. You've held your higher lows. It's all nice and clean. When you get this sort of price action, you know, if you haven't taken some on, it's always good to try to take some off into the highs if you can, especially when you're getting accelerated moves like that. Take some off into the highs, ease off. But then when you saw this little bounce up here and we struggled to get back right back up to the highs of $1.80 and you got this secondary move down, you'd be a bit, especially when you broke through those lows, you'd probably be a bit concerned. So I would have technically probably placed my stop below that, below this big red candle. I'm starting to make a mess of that chart. If I hadn't taken some off here, I might have taken, you never know, take some off an extension when you're up, you're doing quite well. When you get that, I would have placed my stop below there, got stopped out, probably the remaining, if not, and just watched to see what happened from there. Because to me, anything up from a lower high is going to lead to one. So they're going to lead to a decent sell-off, a decent correction, or there's going to be a fair bit of work to do before it becomes positive again and cleans out the traders and puts them back on the sideline. And that's what you can see is worked out beautifully through here. We started to find the low through around that dollar mark. Bounced off, well, if we just draw that properly. Pushed down, retested it, tried to bounce back up, couldn't. The good thing is this is technically a lower high, and it's following some other lower highs. So the trend of lower highs pressuring the market down is, obviously not buying straight off support. Once we start breaking those lower highs, that's where you want to start, when it's on the rise. Okay, so if the market's just heading down like that, obviously you don't want to buy if it support's down here. You don't want to buy if it just pushes into support and just sit with your buy limit, because it could bounce back up. You're feeling good about yourself, then boom, we get massive capitulation. You want to buy, and this is the way I always try to work more, is when it's starting to hold some high lows, and then look for your entry. If I have to give up a bit, fine. So this one here, it was beautiful, and it's even got that lower highs we're holding. It's pressed down. It's pressed down through $1, and it's rejected that all in the one session with this little rejection candle you can see. That rejection candle there. So that's, for me, is beautiful. We rejected that, and then the next day basically broke through that. It's only a minor level. It's around $1.10. We broke through that the next day, pulled back, retested, and now we're starting to lift, and we're starting to take out some of these other lower highs. So I think this one here, although it's a very small, it seems to be that it's traded a lot less, obviously, low volume. I think it's heading in the right direction. We may get a pullback here. Who's going to know what's going to happen just yet? We're getting a bit extended here, so I think there's going to be, I would expect to see, we've got that little move up, maybe a bit more chop, and then start to build some higher lows. That selling pressure can come in. It can get absorbed at higher levels, like we say $1.05, $1.10. Absorbed at higher levels. You got your high low. You start to get we might get that move straight up off here through $1.20 and up we go. And I think that will start to accelerate. And then your next target's going to be up towards that $1.80 move, that $1.80 high. Yeah, no, for sure. This is the way I would attack it. If I can clean that up. Anytime I get a market, let me just draw that up. Let me close it down. I just want to draw it up, what we're talking about. So Nandor brought up a very good point, and it's very important. The way I would structure my watch lists, if we've had a good move up, so this is your weekly chart. We've had a good move up, and then we start, whoop, don't know how that happened. Then we start to get lower highs in place, and we get more of a complex correction. I'm always watching it on the way down, because I want to see, that's probably not the best. Actually, this would be a daily. So you've got daily high lows. Your trend is up. You've got a complex correction. I'm always watching it down there, because what you're seeing, don't forget, on the weekly is a good move up. All this lower highs, lower lows is one move down on the daily. Does that make sense? So between your daily and your weekly, this is a daily chart, higher high, higher low. Then you get a lower high come in, lower high come in, and all that's part of a correction on the weekly chart for a new move up. So what I'm always looking to do is do exactly what Nando's. If you can see that, let me just draw this up. I want to draw it up again so it's clear. So what we've got, that's your weekly move up, and we're looking to take advantage of your pullback. So our latest weekly anchor's down here. We've got a nice strong leg up on the weekly, and we're going into pullback phase. So this is your contraction or your complex correction. If we just draw over that, and what I'd be looking for on the daily is, we've drawn this before, pullbacks, higher highs, higher lows. So that's what you'd expect on the daily, and that's all part of one move up on the weekly. And then what we'd be looking for is potentially lower highs, lower lows to work out on the correction. Hold within your anchor on the weekly, and then we're looking to take an opportunity of the next major leg up. All right, let's draw that back up again for the weekly chart. So for me, I'm always looking at things that look quite good. You have that complex correction. I love that sort of, I really like that kind of price action, because what I'm looking to take opportunity, I'm trying to take a big chunk out of is the move up on a weekly chart. and just using your daily to try to minimize your risk and try to read it from a daily chart. But I like that sort of a weekly move up, that weekly correction, that weekly pullback, and then another weekly, I'm trying to take advantage of another weekly strong leg up. Does that make sense, guys? And using the daily for my entries, or you can even drop it down a time frame if you're really aggressive. Does that make so? It's what Nando was saying, a good time to start watching them when they're correcting like that. You're really just looking for when it starts to hold, higher lows. If you're getting a higher low in here, off support, we get a higher low, and then you're looking for it to accelerate, and that's hopefully the beginning of a nice weekly trend higher. Maya. Does that make sense there, guys? So what we've just as probably heads up, this is one that I think that's potentially, it's got the potential to another strong leg up. So this is a good strong leg up. We've had that healthy correction. We're starting to hold some higher lows. We've had a little washout, and it looks like we may be coming out the other end for a good leg up. And it's still got some work to do before we get that higher low we can work from. And then if it all works out nicely and you start getting some higher lows, higher highs, then we'd be working up, potentially a move up through $1.80 and for that next strong leg up. Once you get into clear skies through $1.80, that'd be great. But if obviously we're to see how it reacts, if that all plays out nicely, checking your next level would probably be at 145. It's going to be maybe a bit of a reaction zone or a reaction zone up at $1.80. Does that make sense? So we've got other ones, probably a good example. This is nice too. This is APT. We've been on this a few times. This is not so much a complex correction because it's all within that support zone. Your major support's down here on the weekly at 5. Get that nice little correction, and we're looking for potentially another leg up as well. But that's had the same. It's had that little spike up through 8. Get the lower high, lower lows, lower high, lower low, come back down, and we're looking for it. So it's reversion back to the mean, back to the averages. You can see the MAs haven't crossed to the downside. What we'll be looking for from here, and you can see that selling. The selling pressure's been quite heavy. From going from overbought to oversold, it's going to the oversold zone, but it's holding up quite nicely, well above the $5 mark. So it's probably about say a 50% retracement of this leg up. Does that make sense? 50%. So it's an ideal zone here to start looking for some higher lows. I've got a feeling I'm going to drop out soon. Does that make sense there, guys? I think we probably dropped out again, didn't we? All right. You're all back on. I'm hoping you're still on. All good. Yep. Thanks, Sharon. So does that make sense with this one? So that's what, like Nandel said, this is probably one that would fit his criteria. You'd be looking at that. You've got your correction lower, reversion to the mean. So you've got to have it back on your, put it on the radar and just start to watch it to see if we can push up and go from oversold to overbought and see if that overbought leg up, we get up into overbought, if we've pushed straight up and through $8 and just see where we go to from there and just follow the, higher highs, follow the leg up, see how much of a chunk. So that way, if it all plays out nicely, I'd expect that to move straight up through 8. But I've just really, for my entry, I just want to be proven right where I get that sellers try to push it down, buyers step in early. Potentially, it's got to pop up to 7, pull back to 650, and then you see it starting to hold, starting to lift again, and then I'll be looking to jump on. Once I get confirmation that I've built that high low, I'm on the right side of the market moving, not moving down. I'm not buying into weakness. I'm buying into strength. And just see how far I can follow it from there. That's APT. Perseus, if I can get probably something a bit similar. It's pressed up. It's had a good correction. You can see these wicks starting to form at around that 40 mark. It's just lifted today on the back of a good healthy gold rally. And you can see last time it was in this overextended to the downside, oversold territory. We were way down just above 30. We were approaching 30 cents. We had a good lift off. Sellers has tried to knock it down a bit, but we really probably just retraced about anywhere between around 40% of that moved up, and we're back into oversold. So that's a good sign that buyers are starting to step in. Buyers are holding it up. Yeah. Yeah, it's frustrating. I'm going to try through my mobile. So next Monday, I might just try it back through the mobile and see if that's a lot cleaner. If it works out, we'll just stick with the mobile. Seemed to work all right. There's no problem with download through this. It just seems to be this choppiness of the upload. It's annoying. Anyway, we'll see. So does that make sense of what we've been looking at? FMG's going all right. So you want to look at that can? Can we look at that? Not funny, I know. So I think there's two things with this CAN. Obviously from the weekly, we've had the initially when it come on, was that way back in 2013? Pressed up through $4, bang, smashed down the start of 2014 for whatever reason. Went sideways pretty much right up until the start of 2017 when they become a bit more of a hit, old cannabis stocks, and we started lifting. So this is beautiful. We've had press up from a higher low. Sorry, every time I turn around, we've just dropped out again. All right, so this is CAN. Back in the CAN, we're on the daily chart here. You can see it's pressed up high, pulled back, built that higher low, started working its way back up again, pushed right up to 375. That was pretty much a big washout, but it still held beautifully through 250, and then we lifted and pressed up through 375 again. Got up to around that 450 mark where we've had a big sell-off since then. But what it's done is just actually reacted again back off 250. So that's interesting. I wouldn't buy it, obviously. It doesn't fit my criteria to buy just here because if we just drop it back to the weekly, we've pressed up through a major resistance at 425 on that little spike up. So we took out the previous highs. Whether that means anything at the moment, because it was so long ago, and obviously something's happened in the past, but it's always going to be, from a technical perspective, a zone of potential reaction. If it runs out of steam up there, when you're starting to, the price is obviously getting a bit stretched because it's moved all the way from say 50 cents up to 450, a $4 rally, a good area if you've loaded up around that 50-cent mark, or even here $1 to $1.25 if you load it up. Good place to take some profit, especially if you see some sort of reaction off that zone. So it's acting as a bit of resistance up there. We spike through it and we pull back. So what I'd be looking for now is what's going to happen, or what's potentially going to happen off this support zone at 240. So if we just get that, my coffee machine. So that's our support. We've even washed it out. So a washout doesn't always mean it's a buy. It could mean that it's the preemptive to a move lower. Now we've had that press up. We've come all the way back down, washed out 240, bounced straight back up again. But the thing is, we've gone from overbought up here. We've had the press low. We've come all the way back down into support, all the way back down to oversold. So it's a good, healthy move down. So that's not conducive. If it was a good, strong market, you would have thought it would have pulled up short once we hit oversold. Fell short of support. So somewhere around 320 even to start to work its way higher again. So the fact that it's come all the way back down, washed out support, is more, for me, I attribute that to heavier selling than buying. The buyer's not willing to step in as strong as they were previously, probably off this support here. Somewhere around $1, $1.50, $2 and so on. So what we've done now is just we bounced back up. And if you just reverse what we said, last time we were oversold, we're way up at 460. And it looks like we're heading to oversold now, but we can't make it anywhere near there. So to buy this, I'm not convinced that this is not going to be another strong move down. Potentially, we've got the one leg down. We've bounced off 240 after washout. Are we going to go bang straight back down for a secondary move and then start to hold? Or are we going to push down to 260? If I could just draw that in a different color. Or are we going to do this, push back down, and start to hold up here. And then you see buyers start to step in either at support again at 260, or they're going to step in at higher levels at 280 or $3. What are we going to do from here? Definitely, I think it's one to have on the radar, because this could pull back. I'm sort of inclined to think that's going to happen. I just want to see what sort of strength, get an idea of the strength of buying and selling from these stochastics. Does that make sense there, Sharon? Or as long as I'm coming through on the stream, that's all good. Just let me know if does that make sense to you guys, what we're just describing through there? I think we're at that point now. If we can't go higher here, I think we need this sort of action, a bit more, like we say, a bit more contraction, where the market contracts in itself. So we're dragging in buyers here. The sellers haven't quite finished, but then start to break up or break down. If it breaks down, so be it. We leave it. We watch it for another day. But if it starts to break up, then we start to get an entry set up, and we know where we're going to place our risk, and then we're targeting potentially a move up towards 460 or through 460. All right. Makes sense. We're hanging in there. I'm watching the numbers jump down. It's not as smooth sailing on the stream today. It was actually terrible. Where are we? Market's up 54. It's still looking good. We had some good numbers out in employment. It wasn't... They come out quite healthy. I think the unemployment rate was held at 5.5%, I think, or 5.4. Let me just confirm that. I think it was 5.4, wasn't it? 5.5, sorry. Yeah, so it dropped off from 5.6. That's good. Employment change, you come up, we're expecting around 15,000 new. It's come out at 16,000, but the last was 33,000. So less than previous, but still, come out relatively aligned, which is not a bad thing. Inflation's held in check. So we'll just see. Yeah. All right. Anything else, guys? Otherwise, we might just call it a day there. I'll go and throw my modem across the room, hook up to another computer. If there's nothing else you want to chat about, then we might just call it a day. We'll see how we go. See what the markets do over the next few days. Let's just look at Maya. I just want to put context to Helen's joke. There we go. It looks horrible, doesn't it? Just keeps grinding lower. Yeah, they're not doing so well. Yeah, it's good. See where you bounce to. All right. Well, let's finish up there, guys. Again, sorry about the health of the stream. I'm going to hook up and do some testing. So if you do see something pop up, maybe tomorrow, I might try something over the weekend, see what it streams like. Just forget about it. But I'm just going to do a bit of testing to see how stable it can be. If we just whack it back through the phone, it seems to be that's pretty good through the 4G, although the modem I have got is a 4G modem. But I've got a feeling they sort of rigged the numbers, if that makes sense. They only make it a little bit better than ADSL2. Yet the actual going through your mobile network's a lot cleaner, seems to be anyway. All right. It's about it. I'm just checking what else we've got. That's wrap. I'm not too wrapped in wrap at the moment, but it's got potential to hold up if it can. CCA, I think we'll finally... CCA, just keep an eye on that, guys. Anyone that doesn't know about the Ivy coin, go and do a bit of research into Ivy coin. CCA own 33% of Ivy coin. Well, the platform provided to it. That's a new crypto that's just come out. Well oversubscribed, so you might see still a bit of action into CCA. But I think that's holding up. That's actually holding up quite nice, and it has held up. This big red candle was before the capitulation in the US, and it's held up quite nice through all the volatility. So I'm expecting that if I can push up through 115, 16, especially as anyone who's missed out on the Ivy coin, or was it pre-ICO offer, where they have to buy it on market, they might use this as a proxy. So I think that's going to get a good kick on. We'll see. All right, guys. Just hit trigger. Oh, I did it. Beautiful. That's good. Another one on today. That looks really nice. That's some nice price action, just grinding higher. I've got a feeling, have you still got this, Greg? If you have, great. It's looking good. It's holding high lows. It's pressing up the height. So it's all within this last move up. So what we could see, well, what we could be seeing is a nice, healthy trend higher, and it just continues to, it's more controlled than starting to get out of hand. But if it gets out of hand and just rockets up, so be it. We look for a partial, and then we just trail up our risk. That's nice. All right, guys. Thanks for joining me. I hope you had a good weekend. I hope you do have a good weekend. Sorry, have a great weekend, and we'll be back in on 12:30 on Monday, and we'll see if we can get this streaming sorted out and just be a lot smoother, so it doesn't drop out as much. Yeah, any questions you may have, or if there's anything you want to chat about, or you think it's worthwhile, just send it through to support@tradesetup.com.au, and then we'll chat about it in the stream. All right, guys. Great work, Greg. All right, guys. Thanks very much. We'll speak to you again soon. Have a great weekend. Bye.